U.S. China trade talks entering a second day of negotiations. President Trump is slated to meet China's top economic advisor in the Oval Office in roughly an hour. The president weighing in at the White House earlier. Watch this.
We're doing great. We're doing great as a country. And we have a lot of bite back because other countries are not doing well. China's having a very hard time. They're here now. We're going to be seeing them a little bit later. We're trying to work out a new trade deal with China. I think it'll happen. Something will happen. But it's a very big deal. It'll be, if it does happen, it'll be by far the largest trade deal ever made.
Joining us now, the Conference Board Executive Vice President and Chief Economist, Bart van Ark. Bart, great to have you with us.
Hi, Jackie. Nice to be on.
Your thoughts on the president's comments, the meetings that are ongoing with China, the March 1st deadline?
Yeah, well, surely both countries now more than ever are interested in trying to get to something. You know, China's economy is strongly weakening, so they really need a deal because this is hurting them. But frankly, the U.S. also needs a deal. The administration wants a deal here. You know, despite the president's comments that the economy is certainly doing better than economies in other parts of the world, we have some challenges here too, as was indicated by the Fed yesterday. So I think it's really in both parties' interest to get to a deal. I think we'll get somewhere. The question is where exactly. You know, what can we do on the trade imbalances? What can we do on technology transfer? What can we do on market access? That still remains to be seen.
All right, tomorrow, big anticipated jobs report due out. The expectation, 165,000 jobs to be added this month, that the unemployment rate should stay steady at 3.9%. Your thoughts of what we're going to hear, and is there any possibility that these numbers may not necessarily be as accurate as they will be when they're once revised as a result of the shutdown?
Yeah, that's certainly possible, although we have to say that the Bureau of Labor Statistics was actually to do its survey, so it's not necessarily true that their numbers may be less correct than they normally are. We're actually a little bit more optimistic, frankly. We think that even 200,000 jobs may be possible. Obviously, the shutdown is affecting some government jobs, but it will probably not really feed through into the aggregate number. The labor market is holding up steady, but what is really interesting now, of course, with the more dovish tone of the Federal Reserve and a steady labor market, wage inflation is actually becoming more likely. So I think we shouldn't get misled by this dovish tone of the Federal Reserve. If wage inflation is going to feed through in the consumer price index, we may very well see another rate hike sometime during this year. I don't think this is entirely gone.
You bring up an excellent point because the Fed is reaching its targets. It's always said that it would maintain being data dependent, and once it starts to hit those thresholds, it's going to have little options. You know, yesterday the fact that rates stayed steady, as you mentioned, don't mean that they will for the rest of the year.
No, I think, they may be a little bit more tolerant. That seems to be the sound at the moment. I mean, overall, with this slowing global economy, pressures on inflation are down a little. But again, as long as the economy is holding up reasonably well, these cost pressures are going to feed through, and companies will have to decide whether they're going to pass it through, which means a higher CPI, or whether they're going to take the hit on the bottom line. And I think if they get a chance to pass it through, they probably will do so. So that's why we believe that, one rate increase just sometime during this year is still very well possible.
And the market could probably tolerate just one rate increase, right? Last year, 4 increases seemed a little bit more aggressive, especially with the Fed taking the tone that it would be more aggressive this year as well.
Yeah, clearly investors are a little bit bullish now, but I would say that, 1 rate increase is very well possible. I don't think we have to worry about it. Look, interest rates are still pretty low given where we are. This is good news for the market. The recession risk and the recession fear is probably going to go down a little bit because of this, which means that businesses are likely to continue to invest. But that means the economy will actually keep some strength, and that will feed itself through into higher prices.
Also, the Fed saying that it was going to trim the balance sheet, but that it was going to do it slowly. And investors like that as well, because they want to make sure that the Fed still has a presence in that market.
Yeah, that actually was, I think, a little bit more the surprising news, is that actually they were also pretty dovish on the balance sheet. They'll continue to do it, but at a slower pace. Frankly, this balance sheet is an issue. And, from the perspective of the long term and the debt, I'm a little bit surprised that they sort of push so hard on that. I think the markets are very sensitive on the base rate, but on the balance sheet, I would have expected them to continue to actually, try to slow that down a little bit. But apparently the tone is really dovish at the moment, that's for sure.
All right, Bart van Ark, great to see you. Thank you.